बैंकिंग सेक्टर को लेकर कुछ प्रमुख निर्णय मंत्रिपरिषद में हुआ है, लेकिन एक मर्यादा है कि जब माननीय राष्ट्रपति जी को कोई मंत्रिपरिषद सिफारिश करता है तो उस प्रपोजल की डिटेल्स हम तब तक नहीं देते जब तक राष्ट्रपति भवन से और माननीय राष्ट्रपति जी का उसको स्वीकृति ना आ जाए। तो जैसे ही वो स्वीकृति आएगी तो उसकी डिटेल्स आपको हम लोग दे देंगे।
All right, this is a very big development, one that will change the course of the Indian economy. Perhaps look at the credit offtake, which is at historic low levels. Look at the twin balance sheets of the Indian economy, and to decipher the impact of this path-breaking decision, we've got three people tracking various developments, various angles on that story. We've got Untitled Chapter, who is going to tell us how do things change as far as the RBI is concerned. Ruchi Bhatia will break down what the new policy could possibly entail, what projects could be looked at, and Ajay Sharma will tell us what will this mean for markets and trade tomorrow, especially the banking counters. Adrija, you've picked up some exclusive information as things have progressed this evening. What exactly are you picking up? I mean, what sort of powers will the RBI have? Because one is given to understand that this is a legislative backing of the decision we've been taken, and there's some amount of chest thumping that we at ET now should be doing, because we told you this on the 31st of March. It's finally official. So I'm curious to know, legislative banking will mean changes to the Banking Regulation Act, will mean changes in powers to the RBI. What will those powers entail?
Yes, definitely this is a big development, because if you consider the banking regulation scheme, it basically deals with section 35A of the RBI Act, which basically gives the RBI certain accountability, certain responsibility when it comes to cracking down on NPA. What we are looking at here is that these specific amendments that today Finance Minister Jaitley referred to was basically giving more and more power to the Reserve Bank of India in order to crack down on these loans, on these NPA. We know that the sectors, especially sectors like steel and textile, have been suffering for a long time, and these banks have been also suffering due to the entire NPA mess. It's a 6 trillion rupee NPA mess. So these amendments are going to specifically look at making sure that the RBI is cracking down power on these specific issues increases. In fact, I must remind you that a few weeks back, Finance Minister Arun Jaitley had also said that he will also make sure that the RBI is able to crack down on the borrowers as well with the specific amendments. What is interesting is that the government, the centre here, has promulgated an ordinance in order to seek the legislative changes that it wants to, even when the parliament is not in session, and the president is going to give his assent to this particular changes soon. And this is going to be a big development to ensure that the NPA mess, which is a much talked about mess, finds some strict resolution.
That's Audrey. Let's stay with that big story that we are breaking right here on India Tonight. A team of reporters is getting you exclusive details of what exactly has been cleared by the cabinet that is now being considered by the president for his assent. We expect that to come through later tonight. Ruchi, specifically, what amendments can we expect in this ordinance?
So, Sandeep, what we understand that currently Section 35A or 1949 of the Banking Regulation Act gives powers to the Reserve Bank to give some sort of a wider direction to the public sector banks. But now we are expecting these changes. Under the new changes, we expect some sort of specific directions to be given to banks case by case, so that they are able to, case by case, look at these problems, address the issues of particular NPAs. Remember, there are, in fact, even the finance minister has said that there are about 30 to 40 big NPA cases, while 6 lakh crore is the kind of the number that we are looking at, but majority of the problem is with these 30 to 40 accounts, and which is what the government is looking to address with this. We understand that under Section 35A, RBI will be given more powers. They will be, the ones who will be taking a final call on one-time settlement, on a haircut of sorts, and in fact even a wider policy we are expecting on what should be done to the stressed assets. assets, like a public auction of sorts for sectors such as steel and power. We at ET Now have been reporting this time and again, and we understand that the final policy will entail this. And lastly, we understand that some sort of specific milestones will be given to banks so that they are able to be able to achieve their targets in terms of gross NPAs, in terms of net NPAs. We heard recently the parliamentary panel itself give some sort of directions to IDBI Bank, and such directions will be given to all banks across the board so that they are able to deal with very specific issues going forward.
Indeed. Just hold your thoughts there, Ruchi, because it's time to get in Ajay Sharma as well. And Ajay, one expects the trading action to be centered around some of these state-owned lenders because they're sitting on big loan piles that have turned into NPAs. My larger question is, how should one expect trading in these counters? Because this is a big shot in the arm for these lenders, isn't it?
Well, that's absolutely correct, Supriya. In fact, if one were to talk about the commentary coming from various strategy reports in the last 1.5 months, this was one moot point which every strategy report, mentioned and said that what is holding them back from really upgrading the earnings estimate for India as a country and benchmark indices is NPA resolution. And right now, the positioning in the market is such. Last 3 days, some short positions have been built into the market. If you look at the Bank Nifty today, it ended at day's low. So the element of surprise, which the market was not expecting this this evening, and there's an element of surprise which is built in now, which could lead to a gap up opening in tomorrow's session, led by, of course, PSU banks, as you just mentioned. But beyond a day or two of trading action, this is a bigger move which the FII community, international rating agencies, will start looking at very carefully. In fact, 24 hours back, Fitch just shied away and made a comment that the NPMS continues to remain a big issue, and probably that is the reason why sovereign upgrade may not be a great thing right now. So that is a bigger thing to watch out for, and it will be interesting how these larger JP Morgans, Goldman Sachs of the world, they start looking at Indian corporate sector in new light. And very quickly, two elements: the details of the policy which is coming out would also fuel a lot of M&A, because the banks would get the right of auctioning the assets at an appropriate price. Just the way the Kingfisher Villa finally got sold off to a businessman right here based in Mumbai. So these are very incremental signs which the market should be able to read in positive light.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.